This is the Chainlink 1-year overview reading for the year 2024. It's currently October 9th, 2023, 9:54 p.m. Eastern Time. Link at the time of this reading is currently $7.30. That's USD. And the shuffle file that we're about to play for you was created on October 5th, 2023 at 10:27 p.m. Eastern Time. That's this video right here. So the overall theme and behavior for Link in 2024, we have erratic behavior back and forth through the same price level, in the midst of which we should revisit a crest, which was an opportunity, possibly revisit a trough, that was an opportunity as well, which I'm seeing on larger scale readings with the pleasure card, but definitely a crest that will be revisited, probably a trough that will be revisited, and that's crests and troughs that are important on a multi-year scale. It's crossed with either a sharp drop or bearish price swings. Behavior around the highest high, we'll see overbought peaks that we sell off from, and it looks like there's more than one of them. When we sell off, it'll be through multiple support levels off of the peak. And then behavior around the lowest low or lows for the year, looks like there's probably more than one. We have a rally along a diagonal trend line that ends with a fast sudden move higher, and then a breakdown through that diagonal trend line with increasing volatility taking us into the low. And I'll talk about the timing of the low and the highs, as well as the best trade opportunities and all that stuff in more detail after we take a look and see how we're doing for 2023. The 2023 reading was created on December 20th, 2022, 7:31 p.m. Eastern Time, still being used today. So we have a possibility of a highest high in January. We definitely have a prominent peak or crest in January, and you can see we go into this prominent peak in January, not a high side, but a prominent peak, and then another prominent peak in February is indicated here, prominent trough and peak in March, trough and peak in March, and then it looks like we have the highest high in May, and we may have been a little bit late on that. We have the highest high for April 18th, so just a little bit shy, looks like, but we were pretty solid as far as a highest high being there around May. And then there's also a lowest low signature here on the cusp of May, June. It took place on April 19th. So that was the highest high, sorry. Pretty close, and then we went into a lowest low almost immediately from the highest high. That's important to point out, right? We have a highest high indicator and a lowest low indicator within close time proximity to each other, and you can see we went from a highest high to a lowest low, boom. There was some possibility of one in July. It doesn't look like it took place. There was a trough in July, but not nearly what I thought it would be. And then we have another lowest low that took place off of a sharp decline, right? Look at this decline. This is late August, early September. That's that unicursal energy, and actually it's off of a highest high. There it is, off of a highest high, and then into what wasn't quite a lowest low, but a very significant low here. This is looking pretty accurate, guys. And so then we went back into highest high here, ace of discs, bearish price swings. So we have a prominent trough and a prominent peak in October. That's important to point out. Looks like we declined in early October from a peak, which is a trade opportunity, and then we have a sideways fluctuating rally out of it, taking us back to another prominent peak or crest here around the cusp of October, November into a trough. This is a pretty solid reading, guys. And since that time, I've gotten much better. So this is the 2024. So I'm not going to give you guys all of the highs and all of the lows. I'm tired of giving away free information and people not sending back 5%. I mean, 5% of people who watch this, of viewers, send back 5% with the rule of karma. So you know, I'm going to give you guys the first quarter of the year, and that'll give you guys a taste test and help you make some money in the first quarter of the year. And then after that, you should have money to be able to support the channel as well. Not just one way, but both ways, back and forth. Quid pro quo, my friends. All right, so the first highest high that I see is somewhere around the cusp of February, March. I'm leaning towards March, but it's somewhere around the cusp of February, March, and that's after a prominent trough or possibly even a lowest low on the cusp of January, February. But that's not the strongest probable location of the lowest low. I'll talk about the strongest probable location of the lowest low as we progress through the reading, but this is one of the strongest probable locations of a highest high for the year, here on the cusp of February, March. It may be that we see the high twice, or it may be right on the cusp. Oh, you know what it is? It's probably sideways rotation near the high. It's sideways rotation near the high. Yes, that makes sense. See, we've got the high, then we've got the sideways rotation with the Knight of Discs, and then we have sideways rotation at a key support at a high here. So we do some sideways rotation around this highest high here. And in early January, we have rally along a diagonal trend line on a multi-day scale, breaking through horizontal resistance again on a multi-day scale to meet a second resistance before pulling back to somewhere between those two price levels. That should take place in approximately the first 2 weeks of January, taking us to a prominent peak or crest. There's price swings around the January high, so it could mean that we see the January high more than once, or it could just mean that there's price swings near the high. But it looks like as we get into the later half of January, we get into pretty mixed kind of bearish behavior, decline, incline, decline, like a sideways S formation, if you will. And the low for January, which is probably towards the end of January or on the cusp of January, February, is going to be a notable opportunity standing out on like at least the 1-year chart amongst other opportunities that we'll talk about. So what I would do in early January in the midst of that rally, we'll break through key resistance, horizontal resistance on a multi-day scale. Which one? That's hard to say because we're so far away, but we'll break through key resistance, meet a second one, and then pull back to somewhere between those two price levels on a multi-day scale. And that'll take place within approximately the first 2 weeks. In the midst of that like pulling back to somewhere between those two price levels, that's where I would open up a short position. You could close a short position in the midst of that prominent trough towards the end of the month of January, maybe like the cusp of January, where we'll be doing some sideways rotation along key support on probably like a 1-year chart scale. When you close that short position, you also would want to open up a long position. You can close that long position, it looks like, when we get into highest high around the early part of March, right? So in February, we have this trough on the cusp of January, February, and it's kind of like a U-shaped dip. So we decline, and then we come back to another, like there's a peak, a decline into a low, and then another peak. And we do that. A lot of price changes covered towards the end of the month, taking us to the month's high, which will be a highest high thus far. But then I think probably sideways rotation along a key technical price level near the high will take us into maybe even a higher price level there. It's either the same higher or a higher price level in like the first or second week of March, where we have this sideways rotation that ends with a fast sudden move higher. There's enough price change in late February to position oneself in both directions should they feel the need to do that. What's interesting about what's interesting about the March low is that we have the Ace of Wands. The Ace of Wands in a low significator position usually indicates that we see that low again relatively soon. So like you have this rally out of the low, giving you opportunity to open up a short position in anticipation of revisiting that price level and closing out. But it looks like we rally out of, there's probably a little bit of like a decline. So we have this sideways rotation in March, fast sudden move higher, marking the end of that sideways rotation, taking us to a high or possibly a higher high. And then we probably have a little bit of a dip in there like mid-March to the low with the rally out of that low. A rally that increases with the momentum moving forward out of the month of March and into April. Guys, if you want the full version, really great way to support the channel. The way that you get that, you go to our website, Tarot for Traders. The way that you get that is you go to our website, tarotfortraders.com. Click on our services, SO Meta Posts, scroll down to 1 year report, click here. You have to be logged in, by the way, and you can create a free account so that you can see all of the past posts and whatnot. It's a free account, and so then you specify the year of the reading and the ticker symbol or crypto that you're interested in, and then continue purchase, and that'll get out to you within like the next 2 to 3 weeks. Very reliable information, guys. We have people like repeat customers, they regularly purchase these 1 years because they're reliable, especially if you're not into day trading, but you're more into like buy and hold and long-term swing trades. The 1 years are really the way to go. We'll also talk about in the paid version, guys, of Link, we're going to talk more about this 10-year and how the 1 year for 2023 and 2024 kind of fit into it as far as the pattern of events here, and maybe even what we think this price level will be that's indicated as a high prominent peak or crest here in 2024, which we'll see more than once. Cross-reading congruency at the end of the year too, to 2024 reading. Cross-reading congruency early in the, well, I should say in the one of the high cards here from 2023. But we'll talk about that in more detail in the paid version. My friends, make sure to follow the rule of karma. It's super important. We had somebody that was on our live every single day. They were asking all sorts of buy and sell questions. Never ever sending rule of karma payments ever. And then they started asking me questions about losing trades. Most of them not even trades that we were talking about, just her own trades. But point being is, the universe has shut off that flow of abundance to her because she never followed through on the rule of karma. My friends, make sure to follow through on the rule of karma every single time you profit to guarantee that that flow of abundance continues onward. The universe will protect this channel from misuse. We are looking to turn competitive energy of the stock market into goodwill, and by doing something good while creating wealth for ourselves, we've created a good deed out of creating wealth for ourselves. How can you lose with something like that, my friends? You follow the rule of karma here on the resources tab of our website, Tarot for Traders. 5% of the profit should be donated forward here to one of these charities. 5% of the profit should be donated back to the channel here in one of these links. Leaves you at 90%. Make sure to spend that money out of love. As long as you follow those rules, you're an angel investor of the channel. The universe is going to send it back to you tenfold for following through on the rule of karma, my friends. I'll see you guys on the next one.